Hi guys, it's Arielle here from Fix My Books, and today I'm going to show you how to calculate the sales price for your products if you have an online store. So this is applicable to anyone who has a Shopify, Amazon, Etsy. Basically, if you have any online store or any Ecom store online, this will be helpful. So if you're interested, please keep watching. Okay, so here you can see that the scenario is that you bought 1,000 shirts for $10,000. So all the other expenses listed here are also related to those same shirts. So you paid $10,000 again for the shirts, shipping and delivery, duties, advertising, bank charges. All of these are related to those 1,000 shirts. So we can see here that if you divide these amounts by 1,000, this is what you would get per piece. These are the amounts per piece. So you can see the cost of goods sold is $10 a shirt. Shipping and delivery, again, $2 a shirt over here. Duties are 40 cents a shirt. Advertising and marketing, so this is the customer acquisition cost, $1.30 per shirt. So customer acquisition cost just means that's how much you spent in advertising to acquire that customer or to get that sale. So you spent $1,300 to sell 1,000 shirts, so that's $1.30 per shirt. Now, overhead is all of these expenses below this line, right? I did it this way so it's much easier for you guys to understand. Overhead is just, bank charges, office expenses, payroll, so employees, rent, telephone and internet. So this is very basic, but I wanted to do it this way so it's easy for you guys to understand. So overhead is $6.30 per shirt. So overhead, again, is everything below this line, as you can see. So the total cost of goods sold plus the overhead and everything else, the total is $20. So obviously, if our total is $20 and we sell it at $20 per shirt, we're not going to make any profit. So the profit that we want is $10 per shirt, and that's how we get our sales price of $30 per shirt. And this is how it will look like. So again, from the previous slide or sheet, you can see over here that the sales price is $30 per shirt. And so $30 times 1,000 pieces, our total sales is $30,000. And so because we have our total sales, you can see that the profit is exactly the profit we wanted at $10 per shirt as profit. So you can see that the sales price, calculating it this way, gives you the correct sales price as well as the net profit that you want. So again, in my previous videos, you've heard me say that if you are not tracking these metrics correctly, like the customer acquisition cost, if you don't know that, you're just spending ads blindly, you don't know how much you're actually spending, so you won't be able to get this amount as well. If you aren't doing your bookkeeping regularly, then you won't know how much overhead costs you have because you're not tracking your overhead costs monthly. That's why it's important to do your bookkeeping monthly. Always keep your books up to date because obviously these overhead costs will fluctuate, especially now with the different business environment we're in, because of inflation as well as issues in the supply chains. A lot of costs or inputs have gone up. So shipping and delivery, I have some clients that maybe, they were only spending $2,000 on shipping previously, and now they're spending double that. So let's say $4,000. So if your shipping is now $4 a shirt, then your sales price has to adjust or you're going to make less profit. Right? So let's say shipping is now $4,000 instead of $2,000. So the net profit is only $8,000 because we didn't take that into account. And the sales price, you can see. So if we change the sales price to $32,000, you can see we still get the 10,000 net profit. But if you didn't adjust your sales price because you have no idea what's going on because you're not doing your books regularly, then your sales price will still be at 30,000. So you're not hitting the net profit that you want, which is $10 per shirt or $10,000. You're only getting $8,000 in net profit because the cost of your shipping has gone up. So I've mentioned this previously again, the right way to calculate cost of goods sold and the wrong way. So obviously the correct way is what we did previously. You can see here that the net profit is at 10,000, and this is just an estimate obviously in taxes, but then you're going to pay around $1,300 of taxes on the 10,000 that you've made as net profit. This is the incorrect way to calculate it, and I've mentioned this previously as well, where people, instead of adding cost of goods sold, shipping and delivery, duties and taxes, instead of having all of these separate, what they do is they add the shipping and delivery, duties, and the customer acquisition cost. They add that into the cost of goods sold, which is incorrect because you're double claiming the expenses. You're already claiming the expenses here, and then you're also claiming the expenses over here again. So you're double claiming the expenses, which obviously will show less profit because you have more expenses. But again, at best, this is just a mistake. At worst, it's fraud or tax evasion because you can see that there's a big difference in terms of the amount of taxes that you would have to pay if you calculate your cost of goods sold incorrectly. And you can see the difference between the profit is $3,700 exactly, which is these three together. So you double claim those expenses, which lowered your net profit, which lowered your corporate income taxes owing. Again, this is incorrect. Please don't do this. Don't add them here again because you can see you're already claiming them over here and then you're claiming them here again, which is really incorrect. So if you guys have any questions with how to calculate your sales price, please comment them down below. Let me know. So if you found this video helpful, please don't forget to like, subscribe, and share this video. And don't forget to hit the notification bell so you always get notified whenever I upload new videos to my YouTube channel. And once again, this is Arielle from Fix My Books, helping you fix your books.